Scott, great to see you after a quarter where you did beat expectations but cut guidance. We'll get into all the numbers. I want to start with the big news over the past couple of weeks. Are you going to buy American Airlines?
Yeah. Well, thanks for being here in person, Lisa. First, I'm not going to comment on that, but I will tell you a little bit about, repeat some of the things that I've said in the past. And first, it was a great quarter. Even though fuel prices doubled, the team at United did an incredible job. And really, you look full guidance, giving guidance for the full year, being able to be solidly profitable even in this escalating fuel price environment, I think is really the entree to where we want to go for the future, which is we've built a brand loyal airline by attracting customers, by giving them quality, by giving them value, an airline that customers love. And that gives us resilience in tough times, but it also lets us think about what's the next phase for United Airlines. And we've spent the last couple of years thinking about, proving that this strategy to win brand loyal customers works, but how do we become a truly globally competitive airline? Now, I don't have the answers yet. I'm not saying anything specific about what they are. But today, there's a big trade deficit in the United States with foreign flagged airlines, and they fly 65% of the long haul seats into the U.S., even though only 40% of the customers are foreigners. And that trade deficit is bad for United Airlines. It is bad for U.S. aviation. It's bad for U.S. workers because we actually create some of the really best jobs with the best benefits in the country, not just jobs, but careers. And it's bad for the United States of America. And so I would like to solve that and create a truly global, great airline that all U.S. citizens can be proud of.
So it's important, in other words, for the United States to fortify its airline industry with the competitor in mind, not necessarily of the big three in the U.S. of American, United, and Delta, but internationally with some of the long-haul carriers that you see as really the main competition for the United States. Is that correct?
I feel like what we've at United have done here in the United States by building a brand loyal airline, we really have attracted all the brand loyal, certainly in our hubs, we've attracted the brand loyal customers, and we've won huge market share kind of everywhere that we fly by being better, by being high quality, and that's what's caused us to win. And I think the next phase for us is, can we take that around the globe? Can we do that everywhere that we fly? And look, there's some really good airlines in the Middle East. There's some really good airlines in Asia. They do some things better than us. But can we create a U.S. airline? And I don't have the answer, not 100% sure we can do it, and not proposing any specifics today.
Of course not.
But it's an aspirational vision that I think United is in a unique position to go after because of the success we've had, because our people are great, because of the investments we've made in product and technology to get there, and because we have the willingness to try to do big things, that we are in a unique position to try to achieve that and do something big for United, but also for the country.
You've been really vocal about how it's an opportunity when there is a crisis or when there's serious pressures in the industry. Right now, it's high oil prices, to potentially pick up other assets that could be distressed, others that are weaker, that are falling out of favor. Are there characteristics of airlines that you would consider taking over, assets that you would potentially acquire in this type of period?
Yeah, one, the best way to prepare for a crisis is to be prepared before it starts. We knew something would happen. I didn't know when. We knew something would happen. So we're carrying triple the cash we had pre-COVID. We've moved to the top of the industry in profit margins. We have the best credit rating that we've had in over 30 years, and we're committed to getting to an investment grade balance sheet. That gives us the ability to look through the problems, the spike in oil prices, to the other side, and not have to make short-term, bad strategic decisions. And as I look at assets, like maybe they will, maybe they won't come available. We've actually even had some discussions with one airline about buying some. But the kinds of things we're most focused on are, again, back to this, how do we create a great airline a decommoditized, great airline for customers that can really be stronger internationally? So things that support growing an international network are more interesting to us because that's where our focus, and I think that's where our big future growth potential is.
President Trump gave a nod to you in a conversation yesterday talking about how he likes what you're doing. He said that he didn't really want to see a tie-up between American and United. I know you're not saying anybody. Do you think that this is a more amenable period for tie-ups than it has been in the past? This is sort of a window that airlines can capitalize on to execute mergers that have been hard-fought in the past?
Yeah. Well, I'm not sure, but that's certainly the market consensus. That's what people think. And what I think it is, more than anything, is an opportunity to maybe, instead of looking at everything through the traditional lens, which is mostly a domestic lens, to maybe think about what does quality mean? What do customers want? What do customers really want? And I think we have proven at United, customers want great technology. Like, people love our app. It's so much better than any other airline in the world. They like the information that we can give them. People want great service. People want high reliability. Customers want a great product. Customers want value, and value is much bigger than just the price. And customers want quality, they want value, and I think, whether it's this administration or not, I think thinking about what do customers really want, and look, we have proof points. Like here in 3 of our hubs where we had big competitors, 3 different hubs, we've won about 20 points of market share with the local community over the last year. Those are massive moves at an airline against 3 different competitors that were big in those markets. And it's all because we built a quality airline that takes care of customers and puts customers first.
You've talked about how you are going to raise prices. All the airlines are raising prices, and we've seen this. Are you surprised by how little customers have stopped flying, how much demand destruction there actually has been? So,
airfares have gone, as oil goes up, we need about 15 to 20% increase in airfares to recover ultimately to recover 100% of that fuel price. And so fares have gone up. But in real terms, airfares in 2025 were 27% below where they were 2019, pre-COVID. So we're just starting to catch up we haven't even caught up to inflation, even with the increase in fuel prices. I did expect a bigger price elasticity effect from customers. We've seen actually remarkably strong demand continuing even in the face of what are necessarily higher prices. But we are anticipating somewhere down the road that elasticity is real. Econ 101, we all took it, and that's going to happen, and that there will be less demand. That's partly why we're going to trim some flying out of the third. Not getting rid of airplanes or changing anything strategically, but we're just going to trim some of the marginal, the Tuesday, Wednesday, Saturdays, the red-eye flying out of the second half of the year, because I think both oil has a possibility of being higher for longer, but also in the face of higher fuel prices, there will be less demand, and so we need to supply less to the market.
Is there any scenario where you could see cutting capacity more than that? I mean, there's been discussion around flights to Europe getting canceled as a result of just simply a lack of physical jet fuel available to fly back.
Yeah. Well, first on the physical jet fuel, we have not seen problems yet. Prices are higher, but we haven't actually seen shortages. But we're closely watching everywhere on the globe, but in particular Asia and Europe are the 2 sort of hot spots that we're most focused on. And it's not impossible that something like that would happen. I think we'll manage through it'll be higher priced, but that we'll manage through without getting to shortages. I hope so, even though it could happen. But even if there starts to be shortage, I think what you'll see, you've already seen it in Asia, you've seen a little bit already starting to happen in Europe, is it's more likely to take short-haul services out of the system than the long-haul global flights. There's options for short-haul. You can drive, you can take a train, and the global long-haul to keep the world connected, I think will probably be the last in the tail of where flying would have to stop. So probably going to be able to manage through it.
In the meantime, we've seen other airlines really struggling internationally. Lufthansa, for example, cutting flights. We've seen the Asian carriers really struggle as a result of just a physical lack of jet fuel. Does this give you an opening in some ways on the international scale, given the fact that they're facing some real constraints?
We talked earlier about there may be opportunity in this. I doubt that it's anything because of what's happening on the international carriers. That'll be a temporary phenomenon. They're not going to give up slots. I'd like to get more slots in other places, but people aren't going to give up slots, I don't think, over something like this. So I think the opportunity is more, how do we really create a great U.S. airline that's focused on U.S. citizens primarily, and getting them around the globe? How do we eliminate that 65-40 trade deficit?
Do you think it's appropriate for the government to get a stake in Spirit Airlines as we struggle to fortify the U.S. airlines?
On that point, first, I think you can see this even in this fuel spike, that well-run airlines like United Airlines can remain solidly profitable. And I don't think that this is anywhere close to the U.S. airline industry needing a bailout, the kinds of things that have happened in the past. And the problems at Spirit predate the run-up in fuel. It was a fundamentally flawed business model, and I feel bad that, as much as we're competitive with them, I don't want to see people lose their jobs. By the way, a lot of them are coming to United. I talked to all of our new hire pilot class, and every time there's a whole bunch of hands that came from Spirit. So, but I don't want to see anyone lose their jobs. But this was a fundamentally flawed business model that I've been on going back into the last administration saying it's a it's going to fail because the business model doesn't work. And so I think the spike in fuel prices just moves it forward by a couple of months.
I just want to finish up. You are the economist who has the most front row view to the American economy, more so than anyone else. Do you think right now the economy is better or worse than people think it is?
You know, certainly if I read the headlines, it's better than what the people in the headlines said. Although the stock market, you know, is acting like it's pretty good. So people that vote with their money, that aren't just experts on TV, seem to be voting that the economy is pretty good, and that's what we see. I think the risks are higher in the economy right now. You know, like what's happening with oil. It's such an inelastic demand for oil, and if you get to the point where we have to have demand destruction to overcome oil shortages, I think that could impact the economy, but we just don't see it yet.